Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, October 25th, 2023. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES. The previous session here stayed mostly within Monday's range. As expected, we were looking for bears to eagerly defend the previous session's highs, and that happened in spades there. We did stay within that range for the most part, and here, heading into the RTH Open, we are currently inside day at the moment against the previous session's range. Another narrow range day here heading into the RTH Open, 45% of ADR. 3-day narrow range developing here with great support in the 4240 zone. A failure of 4240 at some point later in the day could open up some weakness ahead, but for right now, expecting further range-bound action for the most part until we do see expansion later on in the week. We do have Fed Chair Powell later on this afternoon. After the close of the market, Fed Chair Powell speaks. That could provide some volatility later on. We had building permits a little bit earlier in the day and new home sales later on. Again, any push through that 4,300 level could open up some upside into 4,425, 4,430. But we've been seeing quite a bit of weakness here so far. So again, bears looking to defend any push into 4,300 for a shot at dropping this thing a bit lower. 4,200 is a big time market structure edge below. It hasn't been tested just yet. Been getting very close, but not quite there. So if we can see a test into that zone, it'll give us a big time indication of how the market's going to treat 4,200. If prices can hold 4,200 again, we could bounce. Failure here, and you start to open up 4,000 below and maybe even lower. So keep an eye on that level overall. Now, taking a look here at the NQ. NQ at a 54% of ADR range day, inside day as well. The previous session popped here late in the day on Microsoft earnings, but for the most part stayed mostly within range of the previous session. Now we're inside the previous session's range yet again. 14.6 continues to be a big time level here of support, and we remain within a short-term downtrend to the downside at the moment. So again, we're coming into a point here where something's got to give. It's either going to push away from 14.6 yet again and go back toward 15.5, or we fail at this level and start to open up some downside. So again, keeping an eye on 14.6. We do continue to see rounded price action up at these highs. Rounded price action there can lead to tend to lead to a downside break at times. So again, 14.5, 14.6 is going to be very important here to see how it plays out down the road. GDP Thursday morning, that could provide some breakout volatility, and then you have core PCE and PCE price index on Friday morning. Taking a look now at crude oil inventories. The expectation here for crude oil is likely for a narrow range day here to develop. We do have crude oil inventories here later today. You can see right here. Inside day at the moment, 33% of average range, 99 ticks of range right now, just 99 cents of total range and exactly 33% of average. Overall, this thing's been averaging exactly $3 per day on a 10-day basis and $3.01 on a 5-day basis, and again being at 99 cents, almost exactly at 33 1/3% almost. And what you're seeing is again a very, very narrow inside day range. That after a recent drop, a high range day down yesterday, and now the expectation here is for a bit of compression with a little bit of a return back toward the previous session's midpoint. Overall, the downtrend remains intact, at least from a short-term perspective. Additionally, recently this thing broke down from this narrow range here. We have the 6-day narrow range that broke down a couple of days ago here. We have a continuation that could take us not only to 81.51 here, but could take us as low as 78 down below. So again, unless this thing can really find acceptance here back above 85s, 86s here, any pullback could be a selling opportunity as this thing starts to work its way down toward 78 down below. Taking a look here at gold futures. Right now, gold about flat on the day. Narrow range price action. We've seen a ton of movement out of gold here ever since the compression and the merging of market structure. big sell-off, big resulting bounce, a huge move back across the 1900 to 2000 market structure, and now the expectation is we may begin to go range bound a bit. Digest the recent gains, stay, say, between 1950 and 2000 from a narrow range basis, or if it becomes more of a wide-ranging holding pattern, then maybe this thing can drop as deep as, say, 1920 and then bounce back up to 2020 and keep a 100-point range here. But overall, a digestive phase may be needed here for gold. Now, keep an eye on any failed new highs here. A failed new high could become a deep sell opportunity for an attempt to find the low right now. Any close through the previous session's midpoint could indicate some weakness up ahead. But right now, could be a bit range bound from a broader perspective over the next week or 2 or 3 weeks as this market continues to remain strong but wants to digest the recent move. All right, let's take a look here at the YM. Taking a look at the YM, this one is up nearly 1/3% inside day. Very narrow range, 143 points of range today. Now, this market right here has continued to hold the 33K level. 33K been razor sharp support here. 32.8 is obviously the market structure edge from the 800s that we've been following. So you have 33.8 to 32.8. Been seeing weakness here. So any failed new high could lead to an opportunity to sell this market into 33 and likely even lower below. The potential is there for an outside day here, but again, got to see how the market responds to these highs and how the market responds overall to the previous session's midpoint. Failure here, and you're opening up the lower end and staying within the 3-day range, especially with Fed Chair Powell on tap later on this afternoon and GDP pre-market Thursday morning. So again, not expecting a breakaway move from this range. Instead, if we get above the highs, expecting the thing to rotate back down into the previous 2-day ranges until proven otherwise. So keep an eye on 33.4. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.